All right. So I just wanted to say welcome. Thank you guys for joining us anyways. I'm really, really excited to share some of the info with you. And if you guys, like I mentioned earlier, if you have any friends that you think could benefit from this information, I am recording the session, so you'll be able to share it with them afterwards. Cassandra, I know you were supposed to jump on a session I did back in May, and the recording, the audio conked out on me, so I wasn't able to share it with you. So I'm glad you're here today to join us. So, and I'm super thankful to Leanne. Leanne is a mortgage rock star. So I definitely trust her implicitly with her advice, and I'm super happy that you're here. So thank you, Leanne. So my job today is just to kind of shed some light on what is happening with the real estate market, because we know that there is so much uncertainty and all these things in the media that we're hearing. So a lot of the questions that I've been getting this year is it even the right time to buy? Should I be moving? What's going on? So I kind of want to shed some light on that. And I made some notes. I'm going to chat about 3 different points. But specifically, I want to touch on the media and what they're broadcasting out there. So I'm just going to admit this. Sorry, guys. So basically, the media likes to broadcast sensational news, right? A lot of the time, that's what sells. They're selling advertisements, and it's a lot of, I don't want to blame it, but a bit of fear mongering, if you will, and a lot of uncertainty in the marketplace. So I actually saw this post the other day, but a couple of weeks ago. There we go. Hi, Marion. I just muted you because I heard some background noise. Sorry. But yeah, so the Financial Post a couple of weeks ago had this headline, and I thought it was hilarious because it said, Canadian real estate landscape shaken to its core with downtown Toronto condo sales falling. So I thought it was pretty hilarious because there's a lot of this fear, a lot of this uncertainty out there, but what are the facts? So I'm going to share with you some of the actual numbers from the Toronto Real Estate Board. These numbers are only a couple of weeks old. Obviously, the latest numbers that I can give you are up to the end of October. So I'm going to share with you some of that information. So regarding the general, oh, sorry, we have another joiner. Regarding the general real estate market, the numbers are records, are hitting records over the last couple of months. The last 4 months have been record statistics. So in October 2020, sales were actually up over 25% and prices were up 13%. And this is across the GTA, all different home types. So looking at the broad spectrum. But going back to the topic of condos for a second, because we were just talking about all that sensationalism in the marketplace. So TREB's third quarter report for the condo market. Now, we're not talking about semis, detached, just condos in general across the GTA. The numbers are actually that sales are up over 10% and the price point is up 8%. So when you see that statistic, obviously it's taking into a broad kind of overview of the condo market, but it isn't all doom and gloom like the media likes to portray it is, right? Since we're on the topic of condos, I do want to actually address the downtown condo kind of situation. Because there's so many people that have questions about that. And I find condos, especially for first-time buyers, if you're thinking about getting in the market, that's, that stepping point into the market a lot of the time. So regarding downtown condos, I'm going to give you my viewpoint on this. And what's actually happening is the condo market is actually better supplied. So a lot of the Airbnbs that were happening in the downtown core, they're short-term rentals. They've now kind of converted into longer-term rentals. A lot of people, obviously, not out at sporting events, not out at entertainment, shows, concerts. They're not spending the weekend in the city. There's not traveling to the city. So a lot of these short-term rentals had to kind of switch their strategy in terms of, the rental market as an investor. So it's just better supplied. That means that there's more condos available for sale. So we're seeing a little bit of a softening there, but there is a silver lining. So it's pretty interesting. On the plus side, this is a huge opportunity. for someone who wants to own some prime real estate in the downtown core, I don't know when this is ever going to happen again, where you have this opportunity to get into the downtown condo market and not be in a bidding war with 15, 20 other buyers trying to get into the downtown core. There will be entertainment and sports and concerts coming back, traveling back to the city. It's downtown Toronto. It's like New York. Can you imagine New York never getting visitors again? That nobody would ever want to go to New York City. I really don't see that happening. That's just my perspective. I do know that the downtown core will bounce back. Toronto will bounce back in that kind of regard. The question is when. We just have to ride it out. Things happen, and you know what? It's one of those kind of things that nobody has a crystal ball and nobody will be able to predict. But I do feel very, very strongly about there being a lot of great opportunity there. So I also wanted to touch on quickly about immigration to the city and to Canada in general. So obviously, pandemic, our borders are shut down. There's less traveling, less people immigrating to Canada. And because of that, I don't know if you guys have seen the reports, but Canada is actually expecting to bring in between 2021 and 2023 over 400,000 immigrants each year to make up for the backlog that they haven't been able to let in 2020. And that's actually great news for us economically. There's a lot of jobs that are going to be created from this. A lot of people moving to Canada in general, but a lot of people want to come to the GTA. This is where job opportunity is, job growth, people that own businesses. I actually saw a stat on this, and I didn't know this. I don't know if anybody else does, but of business owners in Canada that actually have salaried employees, 33% of them are immigrants. That's a third of all business owners in Canada. So if you think about that, like there's a lot of people moving to the GTA, to these bigger spots, even if you're looking to invest necessarily and maybe not want to move in right away, but there's a lot of opportunity there. And I know Leanne will kind of touch on all of the different options that you can kind of look forward to going forward. And I do think also that there is going to be a lot of people moving to Canada just in general because of the way that we've handled the pandemic. I know Leanne and I were talking about this earlier. A lot of people look to Canada for guidance, and we're just viewed around the world as just this really beautiful, well-run country with a great leader, however you want to think about Trudeau, but compared to our neighbors, I mean, it's we definitely have a lot going for us. So I also wanted to touch on the fact that right now there's a lot of opportunity to purchase more bang for your buck, if you will. Interest rates are historically low. I have never seen them this low. I don't think anyone's ever predicted they would drop this low. I mean, my parents, when they talk about interest rates back in the day, they were in the double digits. So I'm gonna flip this over to Leanne because she's the expert in this field, but definitely a lot of opportunity out there if you're thinking about making a move.
Thank you, Mandy. Hi, everyone. That was a great update. I love how passionate you are and how well versed you are in the market. And it's true, when we got on the call earlier today, we just, and not even just today, but every time we kind of get in a call or touch base, we kind of jive and have the same sort of predictions and ideas, which is why I think we partner really well together. So I mirror everything that Mandy says. I really do believe that we just have to be patient, but in the sense of like a first-time home buyer, like honestly, I can't even imagine this being like this is the best time to even consider buying and jumping into that market, because we don't really know how long this opportunity is going to last. So before we kind of get into the interest rates and sort of all that stuff, I wanted to take it a step back. And, I know a couple of people I've spoken to that's, on this call, but, for those that I have not yet met, and I know you're not on video, you might be on by a phone call, so it'll be hard to raise your hands or, throw a comment in the chat. But I wanted to just kind of start off about the difference between what I do versus yourself going to your bank, right? So we all know that we have bank accounts, we have our bank there, some of us have been with our banks for many, many years, or our parents have been, and we know Bob at the bank, and Bob's going to give us the greatest deal, and, yada, 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 right? So, banks are good. Yeah, obviously they lend us money, right? So they're not a bad thing. So, and I do work with big banks. But the difference between myself and going to your bank is I actually work for you. And I have access to various different types of lenders. So we know that there's big banks. There's other lenders. They're called monolines. The only thing they do sell is mortgages. They don't sell investments. They don't have bank accounts. They simply just sell mortgages. They're the same caliber as a big bank. And then obviously, if you have, depending on your portfolio or, your credit or whatever it looks like, I also have access to alternative lenders or even private lenders. So basically, you go to the big bank and all Bob is able to sell you is what that particular financial institute product is. That could be anywhere between 2 to 4 products, but he only is able to kind of service you with those products. However, for me, I have access to over multiple lenders, like we're talking 30 plus lenders, until I find something that's going to meet the need for you, right? So I'm basically doing all the back end work for you. My services are 100% free to you. They are paid by the financial institute that you ultimately choose as your lending partner. And that's how I am paid. So all my services, there's no charge, there's no fees, so forth. Now, how the mortgage application works, it's fairly simple, to be honest. I know it can seem overwhelming for first-time home buyers, but this is why I would say it's super important to make sure that you're partnered with a realtor and someone like myself, a mortgage broker who work together, because basically we are doing little funny things in the background and cleaning everything up and having those conversations to make sure that all you guys need to worry about is falling in love with that your first home, right? And worrying about what couch you're going to buy and what colors you're going to do, what you're going to paint it. Let us do everything else in the background. But the first thing that you should always do is make sure that you're getting your finances in order. Okay. There's been numerous times where I've talked to my realtor partners and then I have clients and they're like, oh no, I think I did an online application and it told me I can afford this. You may not be taking into all the criteria that lenders actually look at. So you may not be getting a complete accurate view. And then what could happen is your realtor is now sending you listings for maybe something that's undervalued or overvalued, which is just going to cause stress and unnecessary work on both sides. So the first thing you need to do is, visit me, fill out an application, and we look at your portfolio together. I mean, everything I do is 100% digital, easy enough to jump on a Zoom call like this, and I literally will take you through your numbers. We can play around with some scenarios, and you're leaving that call 100% confident, knowing what your affordability is. And it's not necessarily about the value of the home that you should be comfortable with. It has to be about what your monthly budget is. You could be approved for a $700,000 home, but personally, you may not want to have all that debt every month. So you may say my max budget is X, and we work backwards from there. Okay. Now, some of the documents that lenders require, this is no matter what lender you're kind of going to, a lender, let's speak about an A lender, which is your kind of basic lender. COVID definitely did bring out some more stricter guidelines in the sense that at the time, the instability for maybe employment, depending on what kind of line of business you were in. And so the requirements were more, letters of employment that were not less than 30 days old, current bank stubs, those sort of things. So what lenders want to see is they want to see an income verification. So again, that'll be a proof of a letter of employment. So whether you're salary or hourly, they will want to see a confirmation from your employer. And then from income verification as well, they're going to want to see 2 years of your income. Okay, so if you're salaried employee or hourly employee, you're going to have your 2018 and 2019 notice of assessments and your T4s. And then if you're self-employed and you're doing verifiable income, you'll have your T1s and your NOAs. Now, the reason for the NOAs is because lenders will not lend to someone if you owe the government. So if they see your NOA, you have a balance of $1,000, $2,000, $5,000, $500, whatever it may be, they will not lend you any money until that balance is at zero. So that is the purpose for the NOA. And then if you are a self-employed and you don't necessarily claim all of your income, there are definitely lenders that we can look at, and there's different ways that we can verify that income for you. So if there's anybody self-employed on the call, there are products out there for you as well. I'm just going to take a pause a second. Anybody have any questions up until now? Pretty straightforward. I'm going to be dumping a lot of information on you, so I just want to make sure I'm pausing just to make sure there's no questions.
I'm just going to jump in quickly and say, and if you do have any questions that you think of while Leanne's speaking, I forgot to mention this at the beginning. Sorry, my bad.
Good.
Pop it in the chat box below and we'll make sure to address everything at the end, okay?
Perfect. Okay, so outside of documents, what else what's really going to impact what you're going to get approved for, what type of lender you're going to get approved with, is your credit rating. So for those of you who have a great credit rating, keep doing what you're doing and don't change anything. For those of you who may have a credit rating of 680 or lower, there are definitely lenders out there who will have products for you. It just changes the whole sort of criteria of what the product is. So for example, you may not get that lower interest rate that you wanted, but it shouldn't stop you from, getting into the market, because at the same time, you're now getting a mortgage, which is going to strengthen your credit report. And then, you can kind of take that as a short term, build up your credit again, and then we can just refinance you into an A lender. So I just though want to make sure that you understand from a credit perspective, the typical myth I get, the question is, are you going to pull a credit rating? And is it a hard pull or a soft pull? I'm like, I'm not sure what a hard or soft pull is, but yes, I'm going to pull your credit. And just so that you know, it's so minimal towards your overarching score. What actually is significant to the impact of your score is your utilization of your debt. So for example, if you have a credit card, allowable balance up to 10,000 and you have over 50% balance showing on that credit card, that's a big hit to your credit report. Another one that you have to make sure that you're watching out for is the payment structure. So if you're not paying your bills every single month, that is going to hit your credit score. And those two things alone will make up over 70% of your total credit rating. So don't worry about your credit report being pulled. It's so insignificant that, I think people just get hung up on that. Okay, now what I'm going to get into, I mentioned earlier about monolines versus the big banks. Okay, monolines, as I mentioned, all they service, all they sell is mortgages. Okay, we know our big banks, they have mortgages. Yes, they have investments. Yes, they have credit cards. Yes, they cross-sell you. They want to put you all in their bank. So you're stuck there. You're not going to go anywhere else. Now, the bonus is you can still keep your bank account. If you're Scotia, RBC, whoever you're with, you can still keep all that, even when you're going with a monoline, because again, a monoline does not have checking your savings. They just become a bill payee to your day-to-day banking. So you never have to transfer anything over. It's simply just a mortgage, okay? Now, the big differences between the two is what we call the mortgage penalties. And that is based on the interest rate. So you may go on Rate Hub, or you may, see, an advertisement on social media or whatever it may be, and someone's saying, 1.50% interest rate, lock in now. You lock in, and 2 years down the line, you need to make a change to your mortgage. Now, the one thing you need to realize is making a change to your mortgage does not mean only selling your home. It means if you want to pull out equity to do some renovations, or maybe you need some cash flow because you're self-employed and you need just some money to live, or you want to consolidate some bills. that is all making a change to your mortgage, which will adhere to a penalty. Okay. Now, monolines will provide you an interest rate that is their wholesale rate. There's no, well, this was our real rate, but we're giving you a discounted rate. The rate that the monolines are going to post on their website is what you're going to be offered. It's called their wholesale rate. Big banks, however, will say, okay, our contract rate is actually 4%. But because, Mandy, you're amazing, you're a great client, you've been with us for 20 years, we're going to give you a super duper discounted rate at 2%. You're going to be like, oh my God, that's amazing. Like, that's fantastic. And then you come to Leanne. Leanne's going to be like, well, I can get you a rate of 2.10. So 10 basis points higher. You're like, no, I'm going to go for that 2%. That's an amazing deal. Well, what happens is when you break that mortgage, they're going to assume their true 4% rate versus that discounted rate. And they're going to take the variance between the two, and they're going to charge you the remaining term of that mortgage, which could be significant dollars. But because the monoline is only giving you a rate at their wholesale, there's no contract versus wholesale rate. Your penalty is just based on the rate at the time you're making a change to the remaining the difference between your rate at the time you signed your mortgage, calculated for the remaining term. So banks are looked upon to have a penalty higher about 4 to 5 times more than a monoline line. Now, in saying that, monolines are a little bit more strict when it comes to their lending. We have to fall in with certain lending ratios. And monolines are typically, you must fall in with those lending ratios. There's no real wiggle room. Whereas big banks, they're open to taking on the risk. So we can kind of, if your lending ratios are a little bit high, likely I'm going to be able to get that approved at a big bank. So it's just trying to understand kind of the reasons why we would use a big bank over a monoline. In saying that, there's then, when it comes to interest rates, there's different types of interest rates because there's different types of mortgages, in the sense of, you may have heard insured, you may have heard an insurable, you may have heard of uninsurable, or you may not have heard of any of them. So the way the interest rates are determined is if you have less than 20% down payment, it is out of the lender's hand. The lenders will give you a lower rate because there's no risk to them if you default on that mortgage because it's insured. So you may have heard, again, in passing, in advertisements or, media, whatever it may be, CMHC, Genworth, those are two kind of like the major insurance companies we have here in Canada. And they're actually the ones who are approving your mortgage, even though it's going through your financial institute or the lender. Okay, so we really have no wiggle room. And that is why the interest rates are so low with lenders. When you get to an insurable rate, this is where you have 20% down or more, but your purchase price of your home is less than $1 million. And it's not a rental property. It's an owner occupied property. Okay, so in this, yes, you have 20% down. This is why we have the wiggle room, because now it's not insured. The lender is now taking on the full risk of this mortgage loan. So their rates are going to be slightly higher. Now, it could be anywhere from 10 to 20 basis points higher. But again, it's because they're taking on the full risk of that mortgage loan. However, there's more flexibility for us to get outside of those lending ratios. Okay. And then the uninsurable is where it's similar to the insurable, where the rates, it's 20% plus down payment, but your purchase price is over $1 million. And again, it's absolutely not insurable, which is why the lender has an even higher rate for those types of homes, because the risk is that much greater. So they are charging you a higher interest rate because in their mind's eye, they're lending you more money and their risk is higher. So that's kind of a really high level of the reason why you may see fluctuations in interest rates. And I caution you when you're seeing kind of advertisements that are promising you 1.5%, because I guarantee you 99.5% don't qualify for that rate. And it's a marketing ploy to get you to call that lender so that they can say, oh, thank you. Yes, but oh, sorry, you don't qualify, but here's the rate. Okay. So to me, that is kind of just sneaky right off the bat. I don't like to do my business that way. I'm going to be completely upfront with you and transparent in what you're going to be able to get, and explain to the best of my ability on why, interest rates are what they are, and, the product I'm recommending for you. So that is really the big difference between monolines and the big bank. Now, the last piece I just kind of want to touch upon is the end-to-end process, because I know this can be a little bit confusing. And again, earlier in this conversation, I suggested the first thing you need to do is visit me. I get you approved. I look at your numbers. You reach over to Mandy. Mandy now is secure. You're now searching for houses, right? Amazing. You're looking at houses. This is the best. And then all of a sudden you found your perfect home. You're like, oh my God, I want it. Mandy does her magical negotiation, and like, it's yours. It's now yours. What you do is you come to me. Well, what Mandy's going to do is she has her homework. She's going to send me the purchase of sale. She's going to send me all the documents. So you don't have to worry about, because now you're popping champagne and you're like excited because you just bought your first home. Mandy then in the background is going to be sending me all the documents. I'm then going to be submitting your actual purchase approval to the lender, because we've already talked about the lenders. We know which lender you want to go through. We've done all that portion, which is part of the pre-approval. But now you've bought it. I submit it. It usually takes anywhere between 24 and 48 hours. Lenders are extremely busy now. We're seeing turnaround times up to 4 days because the market's so hot. And then you'll get like a pretty little package that'll include your commitment. Okay. The commitment is basically everything that this loan is going to provide, and your commitment to them, their commitment to you. Here's your terms. Here's all this fun stuff. And part of that is the conditions. So you're going to probably be annoyed with me in the beginning, because you're going to be like, why do you need my T4s? Why do you need my NOAs? Why do you need all this documents? I ask for it up front because when you're celebrating your purchase of your first home, the last thing you want to be doing is now going sourcing all these documents. Guess what? You've already given me all these documents. So we're like 3/4 done meeting the conditions of your commitment. Okay. Now we meet all the conditions. What happens? We're now broker complete. Leanne's got you the money. We're all good. Next thing that happens is that file gets instructed to a lawyer. And then the lawyer will manage kind of like all the closing costs, all the transfer of the down payment, the exchange of keys. Mandy and I get to do all the work, but then the lawyer gets to hand you off the keys. I don't know how fair that is, but anyway, we'll that's something I think we have to work on. But they get the excitement of actually handing you over the keys, which I think is like the best part. And then really it's your home. And then you just need to sort of get yourself prepped for moving in and going from there. So I think this is why it's really super important that you're working with partners such as Mandy and myself, and both of us have really great lawyers. We also have movers, we have contractors. We are so our sphere of influence is and referrals are there for you, so you don't have to think about all that stuff. But it's so super important that your partners know one another and that you trust them. So that's really kind of the really high level. I know I gave out a lot of information you're going to need to digest, but if there's any questions, I'm done.
I actually really love, I'm just going to throw in here, I love that you chatted about the credit score. A big question I hear all the time about when you go through the mortgage application, if it's going to affect your credit score. So I'm really happy that you touched on that. I don't know if anybody has any questions. Unmute yourself if you like. This is your opportunity. There are no silly questions. That is something I want to share with you as well. Some first timers, they're very nervous and think that there's weird things that they're asking about. There's nothing weird. We are not surprised by anything, and it's always good to ask. And there's no judgment here. It's a judgment-free zone. So if you have any questions, speak up. Or you can drop it in the chat box below.
So I have a question for Leanne or Mandy, whoever wants to answer. So in terms of the documents required beforehand. The NOAs and the T4s, I'm actually just reading your email now. You require the 2018, and I'm not sure if you already explained that. Why not 2019?
Yeah, you need 2019. So you need 2 years.
Okay, so I need 2018 and 2019. Okay.
Yeah, so you need your last 2 years. And again, like if you're self-employed, this is if you should follow, if you don't already follow us on Instagram, maybe we could put our Instagram handles in the chat. I had posted about this. Again, I don't know if there's any self-employed people on this call. Because the likelihood that 2020 was a little bit softer in terms of business for self-employed folks, depending on what your business is, your income is likely going to be less in 2020. So because I can use the higher of the two years, like the combination of the 2 years, I would say if your 2018 and 2019 is going to look better than your 2019 and 2020 because of the pandemic, I would highly recommend that you move quicker to try to look to buy something before you have to do your taxes for 2020. If it's just going to help you financially increase your income. Now, to your point though, Brenda, I know we've spoken, but say for example, you've got a new job in the middle of 2020, or you've got a significant raise or whatever that may be. If your 2 years average income is less than your current salary, we will take the letter of employment salary that your employer has verified. Okay. Yeah. But they still require those 2 years of taxes from a compliance perspective.
Right.
Yeah.
And then second question was when you were talking about the different types of mortgages, whether it was insured or I forgot which ones you mentioned, non-insured. What if you want to, if you have 20% and you want to, if you're using it as a rental property, what type?
So if it's less than $1 million, a rental property is automatic uninsurable. So you're gonna have the higher rates, and rentals are probably about a 2.3%, which again is like not very high. I was paying what's that?
In the grand scheme of things, like I just want to put it into perspective. Like, yeah, you might be paying a little bit more interest, but I remember 5% even, and that was only a couple of years ago. So,
but I would also like to comment on that. I think really listen, I'm all about trying to save my clients as much money and giving them the best opportunity. But value is perceived differently by people, right? Like if I found a really, really great home and I was willing to pay, like, we think back to the bidding wars when people were bidding $100,000 over a condo. And the insurer, like if you have to get an appraisal and the appraiser was like, that's not worth that. The client has the choice to say, I don't care, I'm still going to pay that $100,000. So perception of value is very different amongst people. I would really highly recommend that you don't focus on the interest rate. You focused on the end goal, right? Because I mean, Mandy can better, talk to this, but me is like, I've owned real estate since I was 25 years old. I have investment properties. And for me, like I look at the average, I think it's 5%, Mandy, correct me if I'm wrong, the 5% appreciation over the last 15 years, taking into consideration the ups and downs, but kind of status quo is a 5% appreciation. If you look at, you're just making 5% on living in a home year over year, who cares? Like, don't get caught up in 2.2%, 2.30%. It's an investment. That house is going to be worth, or that property is going to be worth so much more and do so much more for you in 5 or 10 years from now. That's what you're looking at. You're looking at your future, not today. Real estate is not an investment you do for instant gratification on a return. It's a long-term investment, right? Is that right, Andy? Like, would you agree?
I happen to agree with you. And it's not like this is just, that we're just telling you things that we're not doing ourselves. My husband and I purchased a home this year. Obviously, it wasn't anything crazy. We're not going, like, we're keeping, you know, our reality in check here.
Yeah.
But yeah, definitely I do believe in real estate as an investment. It is a long-term mindset. And honestly, I believe in the doors that real estate opens for you. Without stretching myself a few years ago when I bought my first condo, I would not have had the means to purchase real estate going forward in the future. And I would love to share my story at some point in time. We don't have time for it today, but I definitely believe in the doors that it opens for you, and just all of the opportunities that come from that. And whether that's, like Leanne was saying, whether it's, you know, pulling some equity out and purchasing another property or doing some renovations to the current property, or I've been chatting with people about, let's say the purchase price that you're approved for isn't huge, right? But you have the 20% down and you could possibly buy something outside of the city, rent that out. And then if you still want to move, I mean, you can move within the city and rent or live with family, whatever you want to do, but you still have that investment that's growing, you know, and that passive income while you're just going about your daily life. So, I mean, there's a lot of different options. I mean, Leanne can guide you on the financing end, what the best situation is for you. But I think that there's a lot of great opportunity out there.
Yeah, you'll only use your own money on your first purchase. You never want to use your own money after that. You use the equity in your home and the bank's money. You never get rich off your own money. You get rich off the bank's money. That's the whole name of the game. And to Mandy's point, we would not, this is not just because this is the business we're in, like this is what we do for ourselves, right? So we just, I just think, you know, I think now is just such a critical time for first-time home buyers. If you have some savings, invest it now when the market, especially condos in downtown Toronto, I can't even tell you. Well, Mandy can go on more than I, but like I live downtown Toronto and I'm telling you, like it was crazy. You can find a condo for like, it was going 100,000 over asking for like a 550 square foot condo. It will be that again. It will be that again.
Eventually it will.
Eventually.
We just don't know time-wise. That's why I touched on that earlier, but
yeah,
this is a crazy opportunity. Like I can't wrap my head around. I wish I had so much money that I could just buy up all.
Oh my God, me too.
Down there.
I know.
That would be ideal. But
yeah.
Anybody else? You got any other questions?
No. Okay.
I have been recording this session, so I just wanted to thank you all for attending, number one. I will send a copy of this out to you guys, the file, by email, probably tomorrow at some point, in case you want to, you know, re-go through this again, let the information digest, because I know it was a lot to take in and a lot of facts and figures and definitions. And if you need to share this with somebody, then you're absolutely welcome to do that as well.
I have one question, if that's okay.
Yeah, jump in, hon. How are you?
I'm good. How are you? Thanks for hosting this. Thanks for doing this, both of you. No, I just had a question. Do you think it's better to have more of a down payment or to borrow more? I guess, you know, like better to pay more on the mortgage or have a bigger down payment based on what's happening in the market right now? Or is it like a general rule, always have 20%? Or because when I went to the bank, they actually told me, because based on my income, that I needed like way more than 20%. Like that I needed so much for a down payment that, yeah, it made me feel like, okay, I'm never going to be able to get that much of a down payment.
Yeah. Yeah.
You just hit it right on the nail. Like you totally just answered your own question. Like,
oh, okay.
like, and the reason what I'll say it is I always say that I didn't have 20% down for my first property. Like didn't have that. Because, and as I said, like the average appreciation of homes is 5%. Okay. Well, you think about it now, like the prices keep going up year over year. So your down payment amount has to go up year over year.
That's what I mean. Like,
yeah.
Like I had 20%, like I would have more than 20% if I was paying for a house in Toronto, maybe even 5 years ago, you know, but now because the prices are going up so much more than I'm able to make my down payment. But yeah, I was just wondering about that.
I think if you if you're ready to buy and you have 5% down only and you have to pay that mortgage insurance premium for your first home, get in because you're golden, because now you're making equity off it.
Yeah.
right?
I definitely have to add in, I think it depends on your goals too,
Mhm.
and what the payment is, as long as you're comfortable. For
For
me,
sure.
it wasn't so much like again, it's a personal thing. If somebody's very adamant that they don't want to pay, that mortgage insurance, then that's totally up to them.
Mhm.
But at the end of the day, you're living in the payment, not the interest rate or the insurance payment. So you really have to take that into account. What's your goals? Are you going to live there for at least maybe 3 to 5 years? The equity will just build up, and you're going to be in a much better position 5 years down the road than if you hadn't taken the step, right?
Mhm.
Okay.
Does that help?
Basically, just work out a better deal with a bit less if you can. Kind of work out the best deal you can with a bit less. Like it's just yeah.
I think you can always chat with Leanne, I guess,
Oh
if
yeah.
you want to get a mortgage broker's kind of opinion as opposed to the bank, because you're going to get to, like she talked about at the beginning of
Yeah, it's totally different. Yeah.
totally. So it might be good to even chat about what that looks like and the difference
Yeah.
in different down payment structures.
Yeah. Yeah. Okay, thank you. Great. Thank you. That's
Thanks for
great.
your question. That's great.
Yeah, that was a great one.
Anybody else? Cassandra, Gabriella? Are you ladies good?
I guess the other question is the big question too is Toronto and the GTA, like you talked about all the people coming in and the prices, the way things are, I guess with supply it's expected to keep going up. That's how it seems, but I don't know, it just seems like it would be such a disaster for so many people if prices did fall, but at the same time, like how much more can they go up, right? Like, so it's just like it's just kind of trying to figure out what's in the future, which you can't, right? But it just seems like it's getting untenable, right? Even with the pandemic, the sales have still been gone. Like it's almost like everything that was $1 million is now 1.2, just even through in this pandemic time.
Yeah. And I think that's to what Mandy was saying, like, from a condo perspective, again, your first place, you may not get everything you want in your very first home, right? Like it's maybe not going to be the 1,000 square foot 2 bedroom, with the massive terrace, but like think about for your first place, to Mandy's point, like 3 years even, right? Because like even in 3 years, if you could take that equity, then you buy the 1 bedroom den, then you buy the house, and then like you kind of are building up that ladder. And as that happens, your career is probably building at the same time, and so you're kind of both are growing, right?
Mm-hmm.
So your borrowing opportunity is higher, but I think generally that for me, like I would say, like the condo for a first-time home buyer right now is probably like your best bet,
Right.
to
But at the same
consider.
time, like because of the pandemic, do you think that the little condos are going to do as well? Because so many people don't want them anymore. And we can't, so many people can't do Airbnb and so many people can't travel. Do you know what I mean? Or I guess again, it's just a waiting game till things resume. Is that it? Yeah, that's your point. Okay.
That's why
Yeah.
it's softening right now, right? But we know
Yeah.
that
Yeah.
that's not going to be forever, which is why we're saying this opportunity may not, we don't know how long it'll last. But right now, because the interest rates have never been this low either, right? So you're kind of like a win-win. The prices have softened, but your interest rates are so low that your borrowing power is like so much in your favor. So that's kind of the reason why we wanted to get together and reach out to
Yeah.
first-time home buyers, right? So, kind of educate them a
clarify-
little on that.
Yeah, and clarify some of these questions that are out there, because there's so much noise in the media, guys.
Right.
I know that you know precisely,
Mhm.
but there's a lot of conflicting reports, and sometimes it's just the way that those numbers are interpreted. And it's funny because even with the pandemic, people were predicting, oh, the market's going to tank in 2020. It hasn't happened. Even in the Toronto condo market, even though it's softened, like the condos are still getting a relatively good price, the ones that are selling. It's just taking longer. it's just taking a little bit longer. You have a little bit more negotiating power. You can really snatch up something for a really great deal.
Yep.
And I just think it's a great opportunity. I'm not just selling Toronto condos, but you know, that's kind of the entry point for a lot of first-time buyers. Most first-time buyers are not buying a $800,000 house for their first place, right?
Yeah.
So yeah, it's personal to your situation, I'm going to say. And you also have to be comfortable in the payment. If it fits with your lifestyle and you're not house poor and you're still able to enjoy the things you like to do, you know, whether you have a gym membership, you go out with friends, if you're able to do all of that and you're still able to get yourself in the door, I think it's a great opportunity right now.
I'm happy to chat offline and, you know, answer any questions for you. Again, my services are free to you, so you're not going to get a bill in the mail.
I just wanted to thank everybody again for hopping on. I don't think there's any other questions, but we wanted to do something a little bit fun if you guys are open, because we wanted to do a giveaway. So we're going to do kind of like a little Instagram contest here. So if you want, if you're on Instagram, take a photo of this screen right now if you want, or and if you share this photo and tag Leanne and I did post our, I know most of you follow us anyways, but I did post our handles in the chat box. And tell us one thing that you took away from today, because I know there was a lot of information. So if you found this a little bit valuable, tag us on Instagram, share one thing you found valuable today. And from the people that post to their stories, we're going to pull a winner and we'll be giving away a gift card, because we want to support local and we want to make sure that we're supporting your favorite places in your neighborhood. So yeah.
And I think we're going to do the draw by 5 p.m. tomorrow, I think we said, Mandy.
Yeah.
So if it gives you almost 24 hours
I'm like, I'm taking a picture. Can I enter? No,
I know, I already took my picture. I'm going to go incognito. I'm going to be like, oh, what a great presentation.
Put a little gift.
Yeah, exactly. Well, thank you so much, everybody. Thank you, Mandy, for inviting me to this. And again, if anybody has any questions, feel free to reach out to Mandy, who has my contact, or you can reach out to me on Instagram, and happy to help.
I was going to say, I'll be sharing the recording as well, and I will give you Leanne's contact info, so you can reach out to her anytime with any mortgage questions.
Awesome. Enjoy your night, everyone.
I'll say thank you.
Thank you.
Thank
Bye,
you.
everyone.
Good night now. Bye-bye.
Thanks, everybody. Thanks
No
so much, Mandy. Thanks, Leanne.
Bye.
Guys,
Bye.
have a good night.